You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 4th day of October, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, go to mytradingiq.com, and at the top of the page there's a link. 5-day free trial, no credit card required. Click the purple button, fill out the registration form, hit submit. We will get your desktop set up today, get your indicators indicating today. You'll have tomorrow and Sunday to kind of get familiar with the indicators and the platform. Your free trial will officially start Monday morning and run all the way through next Friday. So there's no better day than today to sign up for the trial. Now, if you're listening to this after the fact, understand it doesn't matter what day of the week or weekend or hour of the day you sign up for the trial. Once we get you set up, you'll get 5 consecutive trading days, even if it stretches over a weekend or even a holiday. mytradingiq.com. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break. We come back for the afternoon broadcast, this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. 2 different ways to join the afternoon broadcast live. I'll give you the best way first. Go to mytradingiq.com and scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward? You'll get an email every trading day about an hour before this broadcast starts. In the email, there's a link. All you have to do is click that link at 12 noon Eastern, and it will automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Now, the free trial, that's limited to 5 consecutive trading days. But when you sign up for the afternoon broadcast, whether you become a member or not, you'll get that invitation every trading day until you cancel, okay? Now, when the live training room ends each day, again, we take a 30-minute break, come back for the free broadcast, the afternoon broadcast, and you can join the afternoon broadcast. I gave you the best way, but there's going to be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but you want to get caught up later. Well, you can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. Now, you gotta believe over 2,600 days, there's an awful lot of teachable moments there. But you're not going to watch them all. So just pick some days at random. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, jump to another day, week, month, year. Watch a little bit. You'll literally see right before your eyes how we've evolved over the years to what is now the simplest strategy, methodology, and indicator set that we've offered, going all the way back to 2005. Everything we do today is still built on the underlying principles that have been in place since the inception of the markets. That's never going to change. But what our goal has been since 2005 is, to the best of our ability, to make things simpler and simpler and simpler. Now, when you take the free trial, you're not just getting access to the live training room. We treat you just like you were a member. For 5 consecutive trading days, we foot the bill. We want you to have a clear head, so at the end of your trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. youtube.com/CFRN. This is our daily schedule for the afternoon broadcast. We start out with our daily devotional, word of prayer, some global news, some market news, a recap of the alerts, the logic alerts, the concierge trade alerts. And about 50 minutes into the broadcast, Michael will join us and give us a recap of everything that happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for about a half an hour. And then I'll wrap things up with our good word for the day. So let's get at it. The topic of our devotion this week and 2 days into next week: divine direction. We've talked about stop. Now think of this in the context of direction. Stop, stay, go, and today is serve. Today's scripture, Matthew 16, verses 24 through 26. Then Jesus went to work on his disciples. Anyone who intends to come with me has to let me lead. You're not in the driver's seat. I am. Don't run from suffering. Embrace it. Follow me, and I'll show you how. Self-help is no help at all. Self-sacrifice is the way. my way to finding yourself, your true self. What kind of deal is it to get everything you want but lose yourself? What could you ever trade your soul for? Matthew 16, verses 24 through 26, from the Message translation. So today we talk about serve. Again, the directions we've talked about: stop, stay, go, serve. Serving others does not come naturally to me. I'm a self-centered person. I like it my way. It's not something I'm proud of, but unfortunately it's true. But I'm not the only one. All of us can be a bit self-centered. By nature, we are selfish people. Just think about it. You don't have to teach a child to be selfish. According to Jesus, life is not all about us, and yet everything in our culture, including that burger place, tries to tell us to have it our way. One of the quickest ways to forget about God is to be consumed with self. Jesus had pretty direct words for those who wanted to follow him. He said, "Whoever wants to be my disciple must deny themselves and take up their cross and follow me." Matthew 16:24. God wants us to have it his way. And he's not talking about extra meat or pull the lettuce. Speaking of food, Jesus made a statement that should make us pause before we order our next burger. John 4:34, "My food is to do the will of him who sent me and to finish his work." Imagine being able to say, "My food is to serve God. My food is to please him. My food is to complete the assignment God sent me to do. My food is to do the will of my Father and to finish his work." That's a different kind of nourishment. That's living with divine directions. Now, culture says, fill yourself. God tells us to fill others. When the people around us say, "Get all you can, it's all about you," God wants us to contribute rather to consume. When all of culture says, "Fill yourself," God tells us to fill others. God did not create us to be takers. He created us to be givers. Rather than focusing on our own desires, we're called to focus on the needs of others. Instead of cutting to the front of the line, we are called to wait at the end. God created us to serve. This kind of living change your story. Think about it. The stories you love reminiscing about are the ones when you helped your neighbor, got involved at church, or gave something away. That's because we were made to serve just as Jesus did on earth. The decision to serve may not feel natural for you. It wasn't always for me. But I've realized serving isn't something we do. A servant is who we're called to be. Because when we serve, we become like Christ. Now, I remember the days when, whether it was a picnic or a church event or birthday party, when the food line opened, I would strategically place myself so that I could casually appear to just naturally be at the front of the line. But over time, as I drew closer to God and understood the scripture, he who is last shall be made first, I stopped behaving that way. Began to hang back. And of course, our parishioners and others would say, hey, come, get at the front of the line, as if I were some special guest. And I said, oh, don't worry, I'll get mine. Now, this was a huge change from who I was before. I would hang back. I would make sure that every person, whether it was 10, 100, or 1,000, everyone got served first. And then I took great pleasure in being the last one to fill their plate. Yeah, sometimes the potato salad was all gone. Sometimes all the chicken breasts were gone. I'm not really a leg or thigh man, but that's okay. I knew that I was following in Jesus's footsteps. Remember, he told us he came not to be served, but to serve. Now, I didn't set out to do that specifically, but as I began to understand the depth of Jesus's teaching, it just sort of naturally happened. Now, don't fall into pride because you've managed to put yourself at the end of the line. That's not what this is about. Because that would be focusing on self. Point of what we're talking about today, serving, is to make sure that others are filled. If we put our focus on caring for others and just kind of forget about ourselves, God, when you're not even looking, will slip in and take care of you. Ask yourself, God, how are you calling me to serve? Who are you calling me to serve? Where are you calling me to serve? Those are very deep questions. Now, when my wife and I returned to the God of Abraham, Isaac, and my grandmother, I was at the age of 37. My wife was a little older than me. All the things that my grandmother had taught me and sown into me, all the seeds she planted as I was a child, they began to come forth and bloom and grow. I didn't have to fake it till I made it. I just knew I wanted to follow teachings of Jesus. Join me in a word of prayer. Heavenly Father, we come before you with hearts open and humbled by your call on our lives. As Jesus taught us, may we take up our cross, deny ourselves, and follow Him faithfully. Remind us that nothing in this world can compare to the gift of life in You. And help us to always seek the eternal over the temporary. Lord, we lift up the victims of Helene, asking for Your comfort, provision, and healing for all who've been affected. And there have been so many. Bring restoration where there is loss and hope where there is despair. We also pray for peace in the Middle East. Yes, Lord, we know that sounds like an oxymoron, but we believe that with You all things are possible. We believe that Your hand will guide all efforts toward unity and an end to violence. Protect the innocent and bring calm to places torn by conflict. And God, as America approaches perhaps the most important presidential election in history, we seek Your wisdom and Your guidance. Help us as a nation to choose leaders who reflect Your truth and righteousness. Unite us in a spirit of peace and understanding, and guide us to pursue what is good and just. It's in Jesus' name, believe and pray. Everybody said, amen. Amen and happy Friday. Let me give you the numbers from around the world. Start in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 140 points. The Nasdaq's up 110. S&P 500 is up 19. The Russell 2000, our man in the street, up 26 points, which is almost 1.25%. In the commodity basket, crude oil up $1.37, trading 75.08 last. That's a gain of almost 2%, or $1,390 per contract traded. Gold down $7.80, trading 26.7140 last. Silver up 23 cents, trading 32.70 last. In the Asian markets at the close, the Nikkei posted a gain of 83 points. The Shanghai rose 248. Now for the Shanghai, that's over 8%. Shanghai has just been on fire. The Hang Seng gained 623 points. That's almost 3%. So we had a green day in Asia. In the UK, the FTSE fell 2 points. The DAX rose 105. CAC gained 63, which is close to 1%. So we had a mixed day in the UK. But so far, it's a big green Radio Friday here in the US of A. There's been a lot of activity this morning, and we'll see that in a few minutes as we go to the charts. Let's take a look at some global news. The death toll from Hurricane Helene has surpassed 200 people across 6 states as crews continue searching for survivors in remote areas 1 week after Helene struck the U.S., roughly 900,000 people remain without power and tens of thousands without running water. Helene is the deadliest storm to make landfall on the U.S. mainland since Hurricane Katrina in 2005. At least 72 victims died in Buncombe County, North Carolina, which includes Asheville, and was hardest hit within Helene's roughly 600-mile-long path of destruction. Helene and other storm systems in the past week dumped more than 30 inches of rain on North Carolina, triggering the biggest flooding in the state's recorded history. Meanwhile, Hurricane Kurt has strengthened into a Category 4 storm in the Atlantic. The storm will remain in open waters, but is expected to create life-threatening surf and rip currents along the U.S. East Coast this weekend. On the other side of the world, at least 2 people were killed, 200 injured, and more than 10,000 evacuated after Typhoon Prathon struck southern Taiwan. Now, I watched some news last night, and I don't care what news channel you get your news from, but I saw the people crying and pleading for our government to come and help them. FEMA has no money to help American citizens who've been devastated, lost everything, their homes, their cars, their businesses, everything. FEMA has no money because they spent it all on illegal immigrants, people illegally in this country, flown around domestically with no ID. You try getting on a domestic flight with no ID. See how that goes. Luxury hotel rooms, culturally appropriate food, which wasn't up to their taste, so it often got thrown away. Think about it. This is the America you and I grew up in. How can we change things? How can we fix things? I only know of and see one answer. And you'll have a chance to participate in that decision come November. Make sure you get out and vote. Make sure you pray. Make sure you vote God's will. And if you ask God, He'll speak to you. FEMA, I'm going to say it again. FEMA has no money because they spent it on people who entered this country illegally, because our current administration not only allowed them to, but welcomed them. Before the current administration, we had a policy: remain in Mexico. And it worked quite well. But on day one of the current administration, 97 executive orders that Trump had made were rescinded, and the floodgates opened. We don't know who these people are, where they came from, what crimes they've committed, and why they're really here. I'm telling you, in prayer the other day, I saw a vision of a standing army on our soil, waiting for the command to rise up. We're talking an army 20 million strong. If you don't pray for anything else, pray for America, the land of liberty, the land of freedom, the land of free speech, one nation under God. Well, more monkey business this morning as the U.S. labor market added far more jobs than projected in September, while the unemployment rate unexpectedly ticked lower, reflecting a stronger picture of the jobs market than Wall Street had expected. Okay, we just had 20 million people over the last 3.5 years cross our border illegally. Yeah, the government's feeding them, putting them up in luxury hotels. But even they know that joyride won't last forever. So are they looking for work? Are they willing to work for less than the American minimum wage? You know the answer. But data from the Bureau of Labor Statistics released today showed the labor market added 254,000 payrolls in September, more additions than the 150,000 expected by economists. Meanwhile, the unemployment rate fell to 4.1% from 4.2% in August. September job additions came in higher than the revised 159,000 added in August. Revisions to both the July and August report showed the U.S. economy added 72,000 more jobs during those 2 months than previously reported. I guess they figure we'll believe anything. Now, how's that going to affect us? Well, everybody was hoping that the Fed would give us another half-point cut. Based on this jobs report, fictitious or not, means the Fed won't cut rates at all next month, much less a half a point or the quarter point that we were promised. But we may get no rate cut at all. Elon Musk published an article yesterday. America is headed for bankruptcy. I've shared it in the discussion group, shared it in the workshop last night. If you haven't read it, whether you like Elon, don't like Elon, you know what a smart guy he is. Just Google. Elon Musk says America headed for bankruptcy. Now, I've been saying for years we're headed for a depression. Now, we've heard talks of soft landings, maybe a recession, but my opinion hasn't changed. We've got a full-blown depression headed our way. You might say, well, that's not true. The Fed can just print our way out of it. And you understand little about economics, because that's what got us in this problem to start with. Is that what you want more of? Bloomberg published this article today. Facebook parent Meta Platforms debuted a new artificial intelligence tool that can generate or edit videos based on a simple text prompt. elevating competition with rivals like OpenAI and Google in the race to develop the world's most advanced AI technology. Could AI be the beast? I don't know. In Colorado, East Colfax Avenue was the best place to find a job. That's what everyone told Sophia Roca. Never mind the open drug use, the sex workers, or the groups of other migrant women marching the sidewalks soliciting work at the very same Mexican restaurants and bakeries. On East Colfax in Aurora, Colorado, bosses would speak Spanish and might be willing to hire someone like Roca, a 49-year-old immigrant from Colombia, without legal authorization to work. Well, if we're going to let him across the border illegally, why not give him a job? They'll work cheaper. Do you know how to cook Mexican food? One woman asked when Roca inquired about a kitchen position. Roca's accent was a giveaway, not Mexican. I can learn, Roca replied in Spanish. And the woman responded, we're not hiring. As record numbers of South Americans attempt to cross the U.S. southern border, well, what do you mean attempt? You just walk across. Many are landing in communities that are unprepared for them, and sometimes outright hostile. Women are leaving Colombia and to a greater extent Venezuela to escape starvation and violence, to provide for their children and to seek medical care. Now, we're a country built on immigrants, legal immigration. No one seems to remember Ellis Island. Many don't know anyone in Denver, but it was the closest city to which Texas was offering free bus rides, both to relieve pressure on its own towns and to make a political point. The liberal-leaning cities about immigration's impact on the border. From Denver, untold numbers made their way to the suburb of Aurora, lured by cheaper rent and abundant Spanish speakers. But finding a job has been anything but easy. Women face their own particular challenges. Didn't we just have a jobs report that said things are so good, can't get a rate cut? Last year, nearly 900,000 women and girls tried to cross the U.S. southern border, more than a 5-fold increase over the last decade. Like many of them, Roca came to the U.S. to help her children. Her adult daughter in Colombia suffers from lupus and can't afford the, I'm doing air quotes, the good medicines. After making it across the U.S. border, Roca told U.S. agents she was seeking asylum. She heard from a shelter worker in El Paso that Denver was offering migrants free housing, and Texas would pay to get her there. Roca arrived in November and stayed 2 weeks in a shelter. When she went looking for work along East Colfax, she observed an icy reception. She didn't know the benefits many recent migrants had received, specifically a path to temporary work visa, and with it better paying jobs, and that they were causing resentment among Aurora's large Mexican community. There's no one in America more upset about what's happened at the border than those who came here legally. And if you're wondering how they're going to vote come November, think about it. Just think about it. Okay, enough of that. I can rant, I can rave, and I can show you logic 247. We're in week 322. Over the last 322 weeks, we issued over 17,900 individual handcrafted alerts. We'll hit 18,000 sometime next week. Since now, over those 322 weeks, we've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. This week, since the markets opened Sunday night, and this recap Valerie did at 6:30 a.m. Eastern this morning, we issued a total of 43 alerts. And at the time of the alert, 6:30 a.m., that was before the 8:30 news came out. That was before the 9:30 open. So a lot has changed. But at the time she did the recap, which she will update and finalize for the week this afternoon, we still had 11 alerts waiting. So that gave us 32 actionable alerts, of which 4, or 13%, would have been stopped out, again based on market structure and that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Is this our best week ever? No. Is it a doggone good week? By the grace of God, it is. Now, the logic alerts. You should not become a member just because you want to trade the logic alerts. That's not the reason we have the logic alerts. The logic alerts are designed to help you learn how to read a chart. Let's face it, when you first looked at trading and looked at the charts, no matter what market, no matter what time frame, it was just chaos. Pure and simple. The purpose of the logic alerts is to turn chaos into clarity. The logic alerts, if you use them properly, will teach you how to find the windows of opportunity. You'll know where to anticipate resistance, where to anticipate support, and you'll see those windows where there's clear sailing. Now, that doesn't mean we know what's going to happen next in the market. No one does. However, I'm going to guess over 322 weeks and almost 18,000 alerts, the average of 20% or less being stopped out, possibly unmatched. Okay? So use the alerts the way they're intended so that you can learn how to trade, so that you can get up every day, get your goal for the day, and then go do life. God did not create you to trade. He has simply given you the business of trading as an opportunity to fulfill the destiny He created you for. Ministry costs money. Whatever God created you for, it's going to take money. Never before in the history of mankind or Christianity has there ever been an opportunity for a person to create a great income working 30 minutes to an hour a day. Now, I know you've read that in emails or on websites. 87, 98% success rate, blah, blah. Okay, ask them to show you the proof. And that's what we do every day. In the live training room, trades are put on and taken off right before your very eyes. The logic alerts and the concierge trade alerts, they come out well ahead of being triggered by price. So there's no woulda, coulda, shoulda here. We just show you the truth. Now, some people want to chase perfection. Well, I'll tell you what perfection is in the world of trading. Knowing what to do, when to do it, and then just doing it. I borrow that from my dearly departed friend, Mark Douglas. Long before we had the logic alerts, which come out around the clock, 24/7, futures trade around the clock, we have traders around the globe. The concierge trade alerts, our original alert service, are different. They're posted as a static report shortly after the Globex open. If you're a member or trial member, read this information here. It comes out every night with the CTAs. Last night, the Friday session began at 6 p.m. Eastern. 25 minutes after the open, all of our members and trial members had every one of these targets. So let's go see just what the market's up to. All right. We got a bullish cross here. We got red and falling here. We got the 62% Fib retracement here. We got the 50% Fib extension here and the daily BBC. Now, last week we talked about the fact that the step line was headed to blue and climbing, and once it crosses, we expect a pullback to the BBC. And we got it. No magic, no voodoo. It's just a matter of being able to read the charts. We clearly said yesterday that the resistance overhead is at the 62% Fib extension. Then red and falling, and the all-time historic high put in September 26th. We're well off the high of the day. We haven't yet touched the 50% Fib extension. But we've said all week that when we hit that 50, hit a bounce, and we did. We hit it again, and we hit the daily BBC, and we got quite a bounce. From roughly 57.30 to 58 is a high today. 58.03. 70 points, 73 points. It's a big bounce. But as we go into the close today, watch to see where price closes. That's going to be very important. So once we get below the BBC, and eventually we will, price always reverts to the mean. In our case, the mean is green. It's called the BBC. It stands for bull bear cross. Bearish below it, bullish above it. Bearish below it, bullish above it. Now those jobs numbers this morning, whether you believe them or not, sent the market higher. But as the day progresses and cooler heads prevail, and some people start to wonder, what's the real truth here? Sunday night, by Monday, I suspect will be below the 50 and below the BBC. I could be wrong. I'm not making a forecast, just an observation. Now, daily charts are important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Because of the size the institutions trade in, they literally move price. So whether you trade futures or stocks or crypto or Forex or ETFs, if you'll make it a part of your daily plan to just study the daily chart for 2 minutes before you drop to your smaller time frames and begin trading, you should see your trading results change for the better over time. On the smaller time frames, you'll often get a perfect setup on the 19 tick range or the 31 or the 7 tick range, and you get slaughtered. And you don't know why. So look at a larger time frame, 30-minute or even the daily. See, not only can you see what the institutional traders are doing at any given time, you can also understand where the major obstacles are. When price was down here, we knew the major obstacle overhead was the 62% fib extension. After that, red and falling. After that, the all-time historic high. Learning to read the chart is very important. Use the logic alerts to learn to read the chart. The business of trading may not become easy, but it can be simple. Watch the close today. If we're able to close the day below the 50% extension and the daily VBC, and Sunday night we could see the 38, the 24% fib retracement, and then right here, bullish cross. Okay, Michael has arrived. So when I come back, we'll go through each one of these individual markets. We'll take a look at the CTAs. We'll take a look at how prices behaved, how it's respected the weekly trading zones, all that and much more. But for now, a recap of the live training room this morning. Some live trading on the TradingView platform. And I'll be back. We'll finish all the markets and wrap the week up with our good word for the day.
Excellent.
Looks good.
All right, here we go. Here we go. Good afternoon, everyone. Today is Friday, the 4th day of October. 4th day of October, 2024. Now, if you have not taken a free trial with us and you want to, then go here to mytradingiq.com and click on this purple button right here. When you click on that, you're going to be brought to this page where all that we ask for is your name, your email, and your phone number. Answer these multiple choice questions, and down here at the bottom, if you have Ninja and you use Ninja Trader charts, give us your machine ID. If you don't, then just give us your TradingView login ID. All right, if you don't have TradingView, you should really go out and get it because the indicators that we use are on TradingView. If you don't know how to get it, go here to mytradingiq.com, click on trading platforms, and just follow the instructions right here. Right? That is how you get TradingView. So today we had a pretty good day today. We had some back and forth in some of the markets, but we were up pretty much all day on the NQ. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. On the NQ, we finished plus 308 the Russell minus 24, the YM plus 3, and the ES plus 4. That put us at $1,485 this morning on the morning session. Today, again, it took 1 minute and 1 trade to get the goal for the day, except today we did it on the ES today. We got 8 ticks profit on the ES. That's where we got the goal for the day today. And we took a whole bunch of trades today, 39 trades this morning. All right, so on a month now, we're at $5,477. That's over 4 business days, averaging $1,369 per morning session. On the year, we're at $91,615, averaging $489 per morning session. So if you were to quit trading following the 24/20 blueprint, quit trading when you get the goal for the day and add 1 contract per month, you would now be at 10 contracts. So far this month, you would be at $5,400 if you did it just like me, and you'd be averaging just under $2,600 an hour at $2,599.49 per hour on the year. Pretty good money if you can take it. All right, so that is that is all that. Sorry, the YM had a trade over here right at the open. I read it when I started this up. I just want to lock in some profit on that because it was from right here on the up close right there. That's why right there, we're in right there. Just want to show you that. So let's get into the actual trades that we did do then. Now that we're in this, I just took 10 ticks profit on that. Now that we're in this, let's just show you. On the YM, this was our day. We were back and forth a bit on the YM and the Russell today. All right, we saw pretty negative on the YM. At a minus 25 right there, that another minus 25 right there, that put us at minus 50. And then we had a plus 20 right here that got us to minus 30. Then we stopped that again, that got us to minus 55. Then we had a plus 45 on that one right there, that got us to minus 10. And then we had a plus 13 on that one right there, got us to plus 3. We had one more break-even trade in here. It looks like it kept going down here. I don't know what I got into and why I didn't finish this. I think I was talking about something else or showing something else. I missed all these trades right here. That one there and that one there. I was probably answering the question about how when the ribbon is spread out like this for a long time, how you get multiple legs, and then when you get down to the bottom at the end of it, the legs back, the pullbacks are going to get bigger and the pushes down are going to get smaller. Like right here, the pullback was smaller actually, but the push down was much smaller. You didn't put in a lower swing, and that would have been an indication right there that you likely going to change direction, and it was a direction change. But this was our last trade in the morning session. It was right there. During the break, it looks like there was a trade right here. That probably would have been a break even for me. It did go all the way up there, but it probably would have just been a break even trade for me. This right here I wouldn't have done because it's going into the zone, and this right here I would have done just a few minutes ago, and this right here I did do just a few minutes ago. I got 10 ticks profit on that. But that was it for the YM. So the YM we ended up with plus 3. Okay, and the Russell, we were back and forth on the Russell today too. We started off okay with it, but then we had some stop outs, as you can see right there. Here it is. We started off right here with plus 2 on that. And we had plus 2, and then we went to plus 22. I think there's something here that I didn't get, or maybe this was a break-even trade. I think this one here we went to plus 22, and then we stopped out right there, went to minus 3, and we stopped out again, went to minus 28. Then we picked up 20 to get us to minus 8, and then we picked up 9 to get us to plus 1, and then we stopped out to get us to minus 24, and then we had a break even, and that was it for that one. Yes. Hang on, let me just stick this in. Hang on. It's about a meeting that I have to do. All right, so I ended up with a break even on this, and then during the break, there was nothing here because the ribbon's not spread out. Right in here, it would have been a little bit risky taking a trade right here because you're right inside the weekly trading zone on the up close. If you did take it, you would have had to suffer the drawback that almost stopped you out, but it would have worked out okay. Right, and that's where that stands right now. The ES, we were back and forth on the ES too. We started out, let's go back to the beginning. Wow, there's a lot of stuff there on the ES today. All right, so here's the beginning. We started out right here where we got the goal for the day, +8. Then we stopped out, that put us at -2. And we had +8, they got us to +6 right here. This one right here was +8, they got us to +6. Then we had a break even right there. And then we went from +6 to +14 on this one. So we picked up 10 ticks there to get us to 14. And then we stopped out right here. It goes back down to +4. We had a break even right there, and that was it for the ES for us. Well, I guess we had 2 more break even trades in here toward the end of the session. Let's see, during the break, there was one nice trade right here. Right. One nice trade right there during the break. One here that looks like it might have just gotten you enough to get the stop to break even, or it would have stopped you out one or the other. But you wouldn't have had any profit in that for sure. This here you wouldn't have done because of the zone. And as we move over here, I'm just looking at the ribbon being all crunched up. This right here was a decent trade moving up. It was followed up by one right here that didn't go anywhere. And now everything's all flattened out. So with the ES, we had actually more trades than we normally do on the ES. We had 9 trades on the ES, and we ended up with +4 overall. Okay, now the NQ is where we had most of our fun this morning. We hit Alt in the back arrow on that. And we'll bring it all the way back. Here we are. All right. So in the pre-market, we had a break even here on the NQ. Then we had a +48, then another +48, then another +48. So at that point, we're at 144. Then we had a +4, it got us to 148. Then another +48, it got us to 296. And a break even, another break even, and another +48, that got us to 244. And a +4, that got us to 248. Then a break even, another break even, another break even, another break even, another +48 that got us to 296, another +48 that got us to 344, and then finally we stopped out. That brought us down to 308. So there was a lot of activity there on the NQ today, a lot of opportunity. Now, once we stopped out on that last one there, we didn't get into the trade setup that we took during the morning session. We were waiting for it to put in lower swing. It finally did put in lower swing way over here. I guess it did right here, but I had stopped trading at that point, so we could have taken another 48 right there. And then this would have stopped us out right there. So I would have taken 48 there, would have been -36 there, would have been a net 12 going over to here. And you could have taken another trade right here that would have been some kind of profit going right down to the zone. And then it switched directions. And once it switched directions, it was another 48 right there with another, that would have been a break even for me in there. And yeah, no opportunity all through here. Get over here, it was right here. That looks like it would have been just enough to get the stop to break even, but you wouldn't have had a trade there. This one right here probably would have been a stop out. Now the ribbon was all crunched up, so there's nothing in there. The next trade was right here. That would have been a stop out. You would have skipped that because that didn't put in a higher swing. And it's looking like it's setting up a trade right now. As a matter of fact, we need the down close of the current bar right now to give us a trade. Okay, the top of this bar right now is at 54.75. So you'd be looking at 46.75. I'm sorry. Let me see. Yeah, 46.75. I think that's right. 46.75 is what you'd be looking at. But we'll see if it closes down. If it doesn't close down, it's not going to be a trade. And there it is. 46.75 was the spot, and I am in that. I actually got in right there at 48.50. I'm going to lock in just 1 point on this. All right, it's gone down to the prior swing low, so it's probably going to come right back up from the prior swing low and get me out right there. I did have an opportunity to take some pretty good profit in that, though, but I wasn't exactly on the ball on that one. It does need to put in a lower swing from here, but you see how simple that trade was, right? Came out of the overbought. You can see all 4 lines in a ribbon. You're in a downtrend. You came out of the overbought. The last one over here, it did put in a lower swing, but that one wasn't a valid trade. Neither was that. This was the first valid trade in this leg right here. Now, one of the things that I said this morning at the end of the session, I was thinking, this is what I was saying to everybody, that this, when it came up here and they were all doing it the same thing, they did a 50% retracement of the day's action, this being the whole day's action. They all came right here and they were all looking bearish, like they're going to go down. And I said, they're going to make a significant move either down or up. I don't know which way it's going to be. I'm either going to be completely right, completely wrong. And I was wrong about saying that because they did make a move down and I was right at the beginning of the move down. And now they're making a move up. So I was also wrong because now they're making a move up, right? Because I was thinking it was going to go down, but now they're all making a little bit of a move up right here. So I was right and wrong. I wasn't completely right or completely wrong. I was completely right and completely wrong. We need to see this actually not completely wrong yet because this is going to make a move up. It's still going sideways. The NQ still hasn't really decided. The ES still hasn't really decided either. It's right here at the midpoint. Russell's made sort of a decision. It's closed up above everything here. So it looks like it's probably going to work its way up to the high of the day. So the Russell and YM will probably move up while the others probably not. That's what I'm thinking. So these two probably not. These two probably moving up. All right. The NQ stop out between 1245 and 1250. You said there was no trade because it didn't make a higher swing. 1245 and 1250. Let's go look at that. Right in here. Hang on. In here, this would have been the first stop out right here. That's why this one would not have been a trade. Okay, this would have been a stop out right here. If I'd have done that one right there. It was between 1240 and 1245. The one you're talking about is this one right here, right? So that would have been okay trade. If we didn't have this trade right here, then this would have been an okay trade. If this one right here didn't come out of the oversold, then this one would have been okay to take. You see that, Miles? But this would have been a stop out. And that's between 45 and 50. This right here, oh no, this one way over here. Oh, this would have been a stop out right here. I'm sorry, that's the one you're talking about. It did put in a higher swing. So that would have been a stop out right there, yeah. Do I see something different about that? I don't think I even noticed it. But if this, yeah, you did put in the higher swing right here. So right here, after you put in that higher swing, it came back down. You would have been I would have been anticipating it's going to get up to the midpoint, is what I would have been anticipating right there. Now the entry point in here is 75 and a quarter, and it ran up to 78, 75. So it didn't go 4 points into profit. So it would have been a stop out. Okay. But this one here, you see how that would have stopped you out. So you wouldn't have had that one. That would have stopped you out. So you wouldn't have done anything else in that direction. And it switched directions here. And there's no trade here, no trade here. The first one that was a valid trade was the one that I just took a minute ago. And now it's got a lower swing in place. Now it's got a lower swing in place. You could have taken this here, I suppose, with that one tick lower swing. Or is it? It's not even one tick lower. Now it's one tick lower. Okay, but now if you look at this, we're in an uptrend right here. Right? We have higher highs and higher lows. We're in an uptrend right here. So this pullback is a bearish pullback in a larger uptrend. So right here, the fact that it's not going anywhere than this right now suggests that it's going to go up. We're going to get something above the ribbon right now, and it's going to start moving up. That's what it suggests. Okay, but what we were talking about this morning, remember when we had one of those really long periods like this one here and that one we just had over there. Sadly, a lot of times when you do that, if you have a really long period without a deep pullback, the deep pullback that happens is going to be just enough to screw you up because you had this really long thing right here. And if you take the indicators off it, right, if you take the indicators off it and you look at it the way that you normally look at price, this right here is a move up. that big, and you're expecting a 50% retracement. So you get your 50% retracement. And in this case right here, once it did the 50% retracement, it's still trying to get back up above that prior swing high. But it just went sideways in here for a little while, and then made a shot up above that prior swing high, which it did just a little bit. And so now it's pulling down, and it should go where? Up some more, right? But this deep pullback, because it was a big one-legged move right there, kind of. One-legged. One-legged. It's just one big leg right there to make that move up. The pullback, the 50% retracement on that is going to actually mess you up, because the ribbon isn't going to change as fast as the price did right here. That's going to put you down below the ribbon, and it's going to mess things up. You're not going to get long trades where you would want to get long trades from this right here. You'd want to get a long trade that's going to punch you back up this leg length from here up to here is what you'd want, right? And that's what the market should do. But because it was such a big move, it's going to take it a while to do it. So this is the leg length that you should get pushed up from. And right here, looks like the low. So this is where you should see it going up to. Right about there. Right, now, did we ever get up there? Almost. Not quite. Okay, but that's what you should see. And by not finishing that leg length, it shows that this trend is weakened right here. Okay, so all the stuff we look at on a smaller time frame, it just happened here on a larger time frame. Where this was your leg length up, this was your pullback, and the pullback was a pretty good one. It shouldn't have gone down below here, really, and it really didn't go down below there. And and you had the leg up, but it didn't continue the trend the whole leg length. It did continue the trend just enough to let you know that you're still sort of in an uptrend. But when you look at the smaller time frame stuff, see right here, it failed to put in a higher swing right there. On this pullback, it failed to put in a higher swing right there, and now it's kind of failing right here. It needs to get down below this and start moving down if it's going to move down. But without any indicators at all, this is just what the price action is telling you. And you throw the indicators on there, and you'll see that it's kind of messy right here, the way it's all coming together. If I just turn that back on, and you'll see in here we had that big leg up. It didn't really be any trades in here. It did give you a trade here, enough to get a break even right there. I think just enough to get a break even on that. Didn't continue the trend. Then it gave this move right here on the downside. Gave this one here you could have taken, which would have stopped you out. Gave that one there. If you didn't take that, you shouldn't take that, because this one should have gone. It should have made the move all the way down and given you a little bit. So you should have had nothing all through here. Then you get over here and it starts going the other way. So right in here, if the ribbon is spread out enough there, and it probably is if I stretch it, you would have had that long trade there, and then you had this one right here that would have failed. This one you would have had to skip. This one right here that would have, if you took this, right, didn't I say, I checked that, didn't I? Oh, that's not a trade, sorry, it was over here. This one would have failed. This one would not have failed. This one would have been break even if it were a trade, but it's not. This one would have failed. And so now it's contemplating turning down. Okay, the trade that I took when I first started this session was right in here. I took this one, and it really didn't put in a lower swing. Okay, so what you're looking at right now is a pullback that is a retracement of this leg up. That's what that is, because this was a big leg up. It's going to have a 50% retracement. It's going to go right through the ribbon and bring it down here. So what it should do right now is get up here, get up above this level, and continue this last leg. Because if you look at this on a bigger picture, let me bring up the bigger picture so you can see it from that perspective. This is the NQ, right, on the bigger picture. So on the bigger picture, you had this pullback right here, then the push up right here, and then it's just going sideways right in here. And anytime you have the BBC and the weekly trading zone right there, and prices going back and forth inside it, it makes for a really choppy thing, really choppy trading in the smaller time frames. So you just gotta be careful here, especially on a Friday afternoon. I think when we get later into the afternoon, the markets are going to be more active, I would think, as we get closer to end in the session. But right now, the NQ and the ES both look like they're going to go up from where they are. And the YM and the Russell both look like they're going to go down from where they are. It's my opinion, but you got to trade what's in front of you. This is what I was talking about on the smaller time frame. Neil, is everything working out okay for you today? After that stuff we went through yesterday? Everything all in sync again and all that? That is something else. If you're trading view charts, sometimes the bar is like on a 31 range, sometimes the bars won't even be 31. And if you ever encounter that, or if your charts don't match up to my charts, if you're watching the meeting and our charts don't match up, switch off to a 1 minute and then go back to a 31 range. Okay, because the way that they create the range bars is a little messed up. What is the range on the YM? A 19 range is what I'm using on that. Michael, 19 range with a 25 tick stop and a 45 tick target on the YM and the Russell. Let's see, 19. Okay, so Bart, is Bart in here? Bart, you are in here. Are you listening right now, Bart? Because if you are, I can meet up with you when this meeting is done. Okay, when I'm done in this meeting, I can create one and meet up with you. You're welcome, Michael. So the YM is about to put in a higher swing right now. The Russell did put in a higher swing. The ES is starting to trend, looks like, and the NQ is starting to move up and probably trend a little bit there too. So we only have 13 minutes left in this session, and we might end up with a couple of trade setups here. It's possible. It's got to go up just a little bit more for us to actually get that, but hopefully it will happen. So we're still waiting for trades here. This has got to put it in a higher swing. It hasn't done that yet. This does have the higher swing from the last opportunity, which was back here. So it needs to pull back now. The S is starting to get out of the range that it was chopping around in, but it's a little choppy in there right now. And the NQ has almost got the ribbon spread out. So I'd rather see the NQ go up a little bit more and then pull back. And the ES go up a little bit more and then pull back. The Russell just needs to pull back, and the YM needs to go up a little bit more and then pull back. That's what I'd like to see if we're going to have any trades in here at all. Okay. If you have not taken a free trial, let me go through this again for anybody that's watching on YouTube. If you've not taken a free trial with us, go to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. When you click on that purple button, it's going to bring you to this registration page. All that we ask for is your name, your email, your phone number. Fill out the drop downs or the multiple choice questions. And if you want to use Ninja charts, give us your machine ID, your Ninja machine ID. Right? If you're not using Ninja charts, then we don't need your machine ID. You can just trade on a Ninja platform if that's what you want to do. That's fine. If you want to use Ninja charts, we need your machine ID to enable that for you. And in TradingView, we need your login ID. You should really try to get TradingView. Okay. really trying to get trading view, because that's what has this indicator down here. We don't have that on anything but trading view. Right? The YM put in the higher swing right now, so that should give us something. And these two both did what I wanted them to do. They both went up a little bit higher before the pullback. So hopefully we're going to get something on those as well right now. And we're starting to get our pullback. We need down closes on both of these. That will give us oversold on both of those. The YM's not giving us the pullback yet, though. He's probably giving 2 down closes. The YN does. I think with the ES and the NQ, I think they're both going to give us a down close right here, and that will get us into the oversold. Now, I'm a little more excited about the NQ one than I am about the ES one, because the NQ is going to be right here at the PVC, at the ribbon. If we get the down close. If we don't get a down close, well, then we got nothing. But wait and see. Bart, are you listening yet? Bart. You have to type in that you're listening, because I asked you a question a few minutes ago. We needed a down close. Really needed that down close, and we didn't get it on either one. This is bouncing off the ribbon. Right? That would have been perfect if we got the down close on that, and then we got the next arrow. I mean, the next bar was an up close. That would have been perfect on the NQ. But as it is, we just have to wait, and it's okay. In the spreadsheet, we had a pretty good day today. Good way to wrap up the week. We were back and forth on all 3 of these markets today. At one point, we were positive on everything, but then we went negative on all 3 of those markets, and we got back to positive on 2 out of 3 of them. We were positive all day on the NQ, though. All day on the NQ. And here we go. We're oversold on the NQ. We're not oversold on the ES. So the NQ is looking like it's going to be a decent trade. 54.25 up to 62.25. This is what it looks like on the DOM. Like that. Okay, I'll stick it right here so you can watch it this way. 54.25 up to 62.25. The ES did not get into the oversold, so you don't have a trade there. We need the Russell to close down. Put that into the oversold. Okay. $53.75 to $61.75 now. Okay, now it's not an easy and obvious one anymore, guys. It is not easy and obvious anymore. It's going to be 59.50 now. Oops, 59.50. But it's no longer easy and obvious. Okay, now it's going to be 58.75. The up close is going to separate this ribbon. When it gets the up close, it's going to separate the ribbon and pull this out of the oversold. But the easy and obvious is gone because the color just changed here. But now the ES is going to trade here too, 82.75 up to 84.75 on the ES. Okay, so we could end up with trades on both of them. They're not as pretty as they would have been a few minutes ago. The Russell needs to give us a down close, put that into the oversold. YM needs probably 2 down closes. But these guys, we need no close on these, and it'll be a trade on both of them. Okay. We'll see how it goes. 82.75 up to 84.75, and the low on this is 50.75, so 58.75. All right, we triggered in on the NQ. And let me make sure my stop is in the right place. Off by 1 tick. And my stop is in the right place. We need 4 points, so it's got to get up to 63. I'm going to bump that stop to break even. And the ES is not triggered yet. The Russell did give the down close. So now the Russell's going to have a trade here too. We got to get to 63 on the NQ right now. 63 on the NQ when the stop goes to break even. And the Russell's also got a trade trigger in here. So let me bring the Russell down. We can figure this out too. Trying to keep my eye on everything right now. Okay, we got the low of this one is 28.5, so it'll be 30.5, 30.5 right here. Okay. And this has a 36 tick stop on it. This has a 10 tick stop on it, I think. This has a 10 tick stop on it. And the Russell doesn't have any stop on it yet. This needs to get up to right here. Right there. Doesn't it? No, 63. Right here is what it needs to get up to. Right, but it's got a 36 tick stop. It might stop me out right here. This bar right here was pretty ugly. See, the easy and obvious went away right here when the color changed. We stopped out on the ES. Looks like we're going to stop out on the NQ too. We didn't stop out on the NQ yet, but I think we're going to. I'm just going to, I'll slide it back if it starts going to profit again. We didn't end up with a trade here on the Russell. Right, the Russell's no longer using obvious, and we just stopped out on the NQ. The Russell's not going to be a trade. That's what I was saying. It's no longer easy and obvious in here. What I was saying this morning to you guys was, take the easy and obvious trades, let the rest of them go. Easy and obvious trades, those are the ones like right in here. You can clearly see all 4 lines in red. Easy and obvious trades right here. Right here. In here, in here, in here, and here. Those are the easy and obvious trades. All right. So YM did not give us a trade here. The Russell did not give us a trade. The ES did, and it stopped us out to the tick so far. The the NQ did, and it stopped us out to the tick so far. So now we just wait. Just wait a few more minutes, see if we get anything else coming up here. Hopefully we will. But don't let those outbounds discourage you. I've been back and forth on everything but the NQ. I've been back and forth on everything all morning. On the NQ, we're up 308 ticks right now. So we had a whole bunch of positive trades. We had 1, 2, 3, 4, 5, 6, 7. 7 trades that were plus 48 ticks this morning on the NQ. So that's pretty good stuff. The way that we ended the morning session, and we were plus 308 on the NQ, minus 24 on the Russell, plus 3 on the YM, and plus 4 on the ES. That put us at 1485 this morning. Again, we're only trying to get the goal for the day, and today it took 1 minute and 1 trade to get the goal. We're up $1,000 at that point. And we took a total of 39 trades this morning. 39 trades. All right, so there's no trade here on the Russell. The YM's positioned to have a trade right now, but all the markets look like they're going to turn down. Who knows? Who knows what they're going to do? You got to trade what's in front of you. All right, Bart, you never answered me. We're not going to meet unless you answer me. All right, so we're running out of time, guys. I'm going to wrap it up. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. If you start the free trial right now, you have it all weekend, and then you have it all week next week too. Right? There's no credit card required for the trial. Click on that, and it's going to bring you to the registration page. Fill this out. Give us this information if you have it. Okay. We just got somebody that signed up for the trial a few minutes ago, and they didn't fill this out at all. So that's it's good if you fill that out and you give us the information ahead of time. All right. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If Dwayne is ready.
Yep.
Okay, Dwayne is ready. Alrighty, let's head it over there.
There we go. Recap of the morning session.
Today it took 1 minute and 1 trade to get to $1,000.
Job.
Thank you. Thank you very much.
Okay, guys, we'll pick up where we left off. Already covered the daily chart of the ES. Let's take another quick peek back, see where we're at. Okay. We talked last night about the 62% fib extension as resistance, then red and falling, and then the all-time historic high, and support being at the 50% fib extension and the daily BBC. What's going to be interesting to see as we move into the close today, if this fades. If this fades come Sunday night, even if we don't get below the BBC today, the market's open Sunday night, keep an eye on the short side. Okay. All right. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes. Just a time frame I chose years ago, and it's been so good to me. Why would I change it? Well, I won't. At least not for now. The vertical lines separate today, Friday. Here's Thursday. Back over here is Wednesday. When price drops to a weekly zone, we expect support. When it rallies up to a weekly zone, we expect resistance until proven otherwise. Okay. The lowest weekly zone this week for the ES is down at 56.91/92. Now we had 3 weekly zones, 1, 2, and 3, that carried over from last week. Okay. Now, this was the open last night. This is a 30-minute candle, 25 minutes into the life of this candle. That's when every member, every trial member, got the concierge trade alert targets that I showed you earlier. Okay. If you're a member or trial member, you got to read this information up here so this makes sense. Okay. So all these targets were in the hands of our members and our trial members 25 minutes after the open. So the ES opened here right at the BBC with blue and climbing below. That's a bullish scenario. So we got a leg. A price rarely travels in a straight line. Sometimes on a larger time frame, it will look like a straight line. Just like this big green candle here, which came off of the job news. I don't know. If you want to call it news, you can. Right? That looks like a straight line, but if you go to a smaller time frame, a range chart, a 1-minute chart, you'll see it's not a straight line. Okay? But learning to use multiple time frames, understanding what's happening in time frames higher than the time frame you're trading in, that's critical to you becoming a consistently profitable trader. So we got a leg and a retracement. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. It stands for bull bear cross. When there's a bearish cross, red line gets below the green line, we expect lower prices. Bullish cross, we expect higher prices. Bearish cross, lower prices. It's so simple. So from support at the BBC, it pushed us right up to the long target. These highs from yesterday. It powered on through, and hit the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. Now, when the market runs into resistance, and that's what we expect when price rallies up to a zone, zones are an area, just like fibs. They print a specific price point on your chart, but it's an area, okay? Resistance. Now you'll notice that this high is this high, okay? That resistance sent us back to support at the BBC. Support sent us back to the zone, resistance, back to the BBC support, and then here we go. This is the 8:30 news. Ran us all the way up to the zone at 57.96/97, which was also a zone from last week. This one, and this one. Sometimes that's just the way the math works out. Resistance will send the market looking for support. Now, only three things happen when price hits a weekly trading zone. Now, I'm going to say it again. The zones come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. Published the zones for our members since December 14th of 2009. This December is going to make 15 years. So, a zone that was published Tuesday morning acted as resistance today and resistance again. This resistance, if you look left, you'll find out why. If you don't look left, you probably don't really want to become a trader. I mean, you might want to become a trader, but you just aren't willing to do the work. That's up to you. Resistance sends us to support at a weekly zone published Monday morning. We did spike it down to the long target, and you'll notice that this support right here lines right up with this bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. You can't argue that was good support. Okay? That support sent us looking for resistance, which we found at this zone, which sent us back to the same area, the same zone, support. Now we've got a sign of weakness, okay? Failure to put in a higher high. A leg, a retracement, a leg, and a retracement, and a lower high. What is that? That's a sign of weakness. See these wicks here? Sign of weakness, okay? So price comes down all the way to the BBC, and it finds what? Support. Bounced it all the way back to the zone. Now that we're bouncing to the zone from below, it should be resistance, okay? So price right now is trapped between resistance. You've got step line, you got blue and climbing, you got the weekly zone. Because price rose up, those are resistance. Can price overcome those and go challenge these highs? Sure. You got to embrace all possibilities. But what's the most high probability move based on this high, this lower high, is another trip back to the BBC. Now that's going to be really important. If price comes down, we know the pullback holds more often than not. You see, even on these candles, even though price spiked it down to the zone, the BBC held. These candles are all touching the BBC. 1, 2, 3, 4, 5, 6, 7. If price takes out this low right here at 63.75, then you've got 57.62 down to 57.60. Goal for the day. Notice, price try to move higher, try to move higher, try to move higher on a larger time frame. The larger the time frame, the more important the information. Remember, institutional traders are looking at daily, weekly, and monthly charts because of their account size. Just as you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts because of our account size. Now, as price comes down, these three things I just mentioned could become support and create another attempt to go higher. But if we trade below and revisit the BBC and take out this low, then market structure says we're going to go here. And if we get through that, here. Now notice this low and this low is a double bottom. We take that out, 57.48 down to 57.44. That's 4 points. Only need 2 points to get your goal for the day. If price takes out this low, you got to deal with this low. You got to expect that to be support until proven otherwise. This is resistance until proven otherwise. Okay? What I really want you to understand at this point, zones that were published Monday morning at 6:15 a.m. Eastern. Here we are on a Friday. Resistance, support. The buyers haven't given up, but there will come a point when the institutional buyers say, hey, we keep buying and buying and buying. We had got good jobs numbers. Market should go higher. But if the market doesn't go higher, guess what? They're going to hit the pause button. It takes financial commitment for price to move higher. However, once the institutional buyers make financial commitments to move price higher and fail, they're going to hit the pause button. When that happens, price will just simply deteriorate. See, they're still trying. They have not given up yet. If we fail to take out this high, there's still 16 minutes left in the life of this candle. And in those 16 minutes, if we cannot take out this high, or let's say we take it out and close with yet another wick overhead, as bullish as this looks, it's actually bearish. Down here is your short trade. If we take this out and close above it, okay, then 57.92 to 57.96, that's 4 points on the upside. So no matter which way price flows, there's always going to be opportunity. You just got to be able to read the map. Okay? On the Dow, here's where we opened last night. Dropped to blue and climbing. Price is trapped between support and resistance. Get a leg up. We get a retracement. We spike the BBC down to here. but we never let go of it. This one candle opened and closed below the BBC, but it failed to take out this low. Buyers came in, saw that as an opportunity, drove us right up to the long target. So we get a leg, a retracement, and a leg where we're still struggling. Take out this high, this high. If we can take out this high, close above it, then you've got an opportunity to get your 20 points, is what you need on the Dow to get your goal for the day up to the high of the day. Okay? Russell. Here's where we opened last night. Same scenario. We're below the BBC, but above blue and climbing. Takes us up to the weekly zone, where we find resistance. That's what we expect. Resistance sends us to support at the BBC, which sends us back to resistance at the zone. Back to support at the BBC. We actually poke above the zone, come back, and here we spike the BBC, but we're still touching it, and we close above it. So we get a leg, a retracement, a leg right to the target. Now see this double top from yesterday? Makes for a mighty good target today. But out comes the news, and it pushes us all the way up to here. And the next zone overhead is 2246/47. Still 3 more zones above. Okay. We're up against, when blue and climbing, see on the way up, you had price, step line, blue and climbing. For a long trade, that's your friend. Once that step line gets above price, then it becomes potential resistance, because it's probably on its way to becoming red and falling, which is bearish. That could potentially send price back to the BBC. If we trade below the BBC, make sure you keep an eye on this area here as potential support. If we take out that support right there, then 2212 to 2210, good window of opportunity. If we take out 2210, then we're back to the zone. Okay? And the zone is where we had the bullish cross. When bullish cross leads to an extended move, the first time price revisits that area will almost always be its support. On the NQ, here's the open. We're above the BBC, we've got blue and climbing, we've got the perfect stack, and we make a run up to the zone. 2042/43. Resistance. We spiked that resistance by just a little bit. Now, anytime we take out a previous high by just a little bit, we're suspicious. Sure enough, price comes back to the BBC. Support. Resistance to support. This time we overcome the zone, the 8:30 news comes out, and we make a run all the way up to the zone at 2242/2243. This is the zone that came out Monday morning for members and trial members. Resistance will send the market looking for support. The pullback to the BBC held, but we spiked it enough to touch the zone. That bounced us up to resistance at this zone. Look at these wicks overhead. Okay? This could be a dogfight into the close. But I assure you, once the institutional traders across the board hit the pause button on the buy side, price drops a lot faster than it rises. Crude oil. This is the only market where we're above the highest weekly trading zone. Now, there is a lot of fundamental reasons for crude. The indices, that's a man-made thing, okay? The S&P, the Dow, the Russell, the NQ. Yes, they represent 500 large cap stocks or 2,000 small cap stocks, etc. This baby right here, God created this, crude oil. Yes, this is a derivative. Yes, this is futures. But again, when you're dealing with something man-made, like the Dow, the ES, the Russell, the NQ, or something God made, because if God made it, there's a finite supply. With the indices, there's an infinite supply. You know how we get crude inventories every Wednesday? You never get any kind of inventories on the indices. Wow, how many December S&P contracts did they print and make available this time? There's no such thing. Now, I'm not saying supply and demand doesn't exist within the indices. It does. But you're dealing with one has an infinite supply, the other has a finite supply. That's really important. You got to get a hold of that. This was the highest weekly zone for crude and for fundamental reasons like the Mideast, where we are. We opened here last night, red and falling overhead, so we wait for the pullback to the BBC. We wait for red and falling to turn to blue and climbing, and bang, there we go, right to target. Pull back, blue and climbing support, put in another high, pull back to the BBC, consolidate, and put in a higher high. Now, there's been talk of crude going to $100 a barrel. I embrace all possibilities. Okay? It wasn't that very long ago. Crude was trading at $20 a barrel. Now, I don't mean last week or last month, but go look at your charts, put it on a daily. You see what I'm talking about. Okay. Now, is this a perfect stack? Yeah. Price, step line, blue and climbing, BBC. From where we are now, 72.45 up to 72.55. Right there is your goal, is potentially your goal for the day. That little area right there. $100 per contract traded. If you've earned the right to trade 10 contracts, then it's $1,000. Now, if this aligns with your smaller time frame range chart, all systems are go. You got to learn to think in multiple time frames. First, you learn to use multiple time frames, then you learn to think in multiple time frames. Gold opened here last night, came down to the BBC, pullback held, overcame red and falling, ran right to the target. this candle here. Opened at 26.78 and ran to 2781.5. So what's that? $300 per contract traded. For the 10 contract trader, it's $3,000. We hit the resistance area. You see this high is this high. I'm showing you market structure. You got to learn to read market structure. Only then will you be able to look at a 30-minute chart and know the great degree of certainty what the next high probability move is. Will you be right 100% of the time? No. Over the last almost 18,000 Logic 247 alerts, we've gotten stopped out 20% or less on a weekly basis. I think we've had weeks where the high was as much as 26% of being stopped out and as low as 0%. Okay. You just got to trade what's in front of you. So we hit resistance at the zone. Price comes back to the BBC. Got red and falling overhead. Price gets below the BBC, pulls back up, hits that long target again. And then here's that 8:30 news, and it sends gold in the opposite direction. But where does it find support? At the weekly zone issued Monday morning. Again, we're closing in on 15 years of publishing the weekly zones. Support is going to send us looking for resistance, red and falling, which will send us looking for support at the zone, which will send us looking for resistance at the zone. We spiked it, but in this 130-minute candle, look where we closed. This was a huge green candle all the way up. You thought it was going to the moon until it didn't. Price gets back below the BBC, comes down to the zone, consolidates 70% of the time. When price touches the zone, you're going to get consolidation. Like this, like this, like this. 20% of the time you'll get rejection. 10% of the time you'll get the slice. Okay? So, we found support at the zone. What's price trying to do? Revert to the mean. Price always reverts to the mean. The question is, when it gets there, will it hold or not? We know the pullback holds more often than not, but eventually it will trade through it. So do you just park an order up here to sell at 26.73? No. You wait for price to get there. And then you see how that candle closes. If it closes above the BBC, then you got to start thinking about resistance here, resistance here, here, and of course here. But if the pullback holds, then you got to start thinking about support. These two indicators here, the weekly zone, this low, this low, this low, this low, this zone. It's almost like a jigsaw puzzle, and the pieces always come together. Silver. So where we opened last night, pulled back to the BBC, found support, pushed us right up to the target. Resistance and just looking for support, which we find right here, support times 2, the BBC and the weekly zone. We get a leg down, we get a retracement back up to the zone, and we get below the BBC, blue and climbing turns to red and falling. It's 8:30, the news came out, and we take a drop. Now this low was 31.75. At 32.75, that's $5,000 per contract traded. From here, to here, 31.75 to 32.75, $5,000 per contract traded. Now this bullish cross here, okay? When a bullish cross leads to an extended move, the first time price revisits that area will almost always be good support. Did it spike it? Yep, right down to this low here. But look where the 30-minute candle closed. Back above the bullish cross. So we get a leg up to the BBC, which we expect to be resistance, and it was. So now the market's got to go find support, which you found at the zone. Support sends us looking for resistance. We spike this zone. That's not the highest zone. There's still one more above. Okay. But this candle, this was a green candle all the way up. But by the time the 30-minute candle closed, we were back here. We go on to put in a lower high, sign of weakness. Price drops back to the zone and finds support. Step line is crossed blue and climbing. That tells us we already had our retracement. So now the question is, will this support hold? If it doesn't, that's okay. Because right down here, 32.27 to 32.25, goal for the day. If we're able to overcome the step line in blue and climbing and take out this high right here, 32.69 to 32.77, that's $400 per contract traded. It only takes 2 pennies in silver to get your goal for the day. It's not the best market for a brand new trader, but as you get your trading legs, it can become a good market. The euro opened here last night and just consolidated sideways all night. So the news came out, and then we dropped to the lowest weekly zone, which of course we expect to be support till proven otherwise. Got a bounce, came back to the zone. The step line has crossed. Red and falling is curling up to become blue and climbing. So what's the high probability move? Back to the BBC. Then the question becomes, does it hold or not? Don't play the guessing game, that's gambling. Wait and see. If price closes above the BBC and then opens and closes above the BBC, you've got all the way up here to the bearish cross to trade. And then here. And then here. Then you got this bearish cross way back here. That was on Wednesday. Okay. So again, this zone came out Monday morning. Here it is on Friday, doing its job. So far, and the day's not over, we only have one market outside of the weekly zones, and that's crude. Okay. One last look at the daily. We're fading. Remember how close we were earlier at the beginning of the broadcast? Now we're below the step line. Now we've got support times a lot. The 50. This little double bottom here, which is right at the BBC. But if this market drops enough to get below the BBC, then you know the institutional traders have either A, hit pause on the buy side, or just want to take profits and not carry all this home over the weekend because of the geopolitical tension that exists in the world today. Who knows what kind of news we could have come out over the weekend. Okay. We don't recommend trading economic reports or global news unless you're a long-term experienced trader with an account deep enough to hold a trade over a period of days. See how prices drop right to the step line? How it continues to move the rest of the session and where it closes. Now, could it suddenly run back up and close here? Or here? Or even here? Yeah. But I want you to think about what you know about technical analysis and what you know about what's going on in the world today, which is the likeliest scenario. You got to embrace all possibilities. That's why we say trade what's in front of you. We always know what the highest probability move is, but we also know after 18,000 or almost 18,000 logic alerts, price doesn't do the high probability thing 20% of the time. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Send an email to support@cfrn.net. Once you become a member, you'll get 2 hours of live interactive trading every trading day. You'll also have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETFs. Price flows the same across all markets and time frames. Like I just showed you, from support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. When you become a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts every night when they're published. You get the weekly trading zones every Monday morning, 6 p.m. Eastern, 6:15 p.m. Eastern. And you'll be able to attend the members only workshop every Thursday night. And if you're a member and you weren't able to attend last night's workshop live over the weekend, be sure and go to the channel, okay, and watch the video of last night's workshop. There's some really good information in there for you, okay? Everything a trader needs, all under one roof, one low price, around the clock support. Let's wrap it up. A good word for the day. The last 3 days we've talked about refusing to live in fear. The most often quoted scripture in the entire Bible is fear not. Got to be a reason for that, right? So today, part 4. If God is for us, who can be against us? Romans 8:31. To overcome fear, you must believe that God is with you. It's the key to your ability to obey what He tells you to do. As you become confident that He is with you, your fear will lessen. When David volunteered to fight Goliath, King Saul said to him, 1 Samuel 17:33, "You are not able to go against this Philistine to fight with him, for you are a youth, and he a man of war from his youth." David replied in the very next verse, "The Lord will deliver me from the hand of this Philistine." Who had greater faith, David or Saul? Remember, you're not in this battle alone. The Lord is with you. When you're convinced of that, your fear will subside. You may not always know what God will do, but you can relax in knowing He will do what needs to be done at the right time. When you think about the future and all the things that are unknown to you, it's easy to feel afraid. But you can view it in 2 ways. You can be pessimistic and fearful, or you can say to yourself, the battle is the Lord's, and He has never lost a battle. You may not always know what to do in a tense situation, but God does. He knows everything prior to it happening, and He has planned your deliverance in advance. Just put one foot in front of the other, confident that He is guiding you. You don't have to see God or feel Him in order to believe that He is with you. Faith is a matter of the heart instead of the natural senses. God is with you. Believe it and refuse to live in fear. That's our good word for the day and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.